Where we are now today, look, the market factors. So we obviously had the October market correction, which creates a disappointment for many investors, but it creates an opportunity for us to find some good stories. Australian economics is still not in dangerous territory. We have GDP growth still 2.5–3%. Inflation's low, interest rates are low, unemployment's low. So domestically, we don't really see any threats to the ability of small companies to grow. The international trade disruption continues and it creates uncertainty, but once again, the headlines are an opportunity for us. We're picking stocks. But what has happened is there's now a blurred line between value and growth because some of the growth stories have become cheaper. And so stock picking really is the answer. And we saw it at the Hearts and Minds conference in Melbourne. I think there was 5 or 6 speakers said the same thing a couple of weeks ago, that it really is a stock pickers market. And we're stock pickers, so we like that. Some certain things that are happening, the infrastructure spend in the east coast of Australia, particularly in New South Wales and Victoria, is real. That revenue is happening, it is building. We're yet to find clear examples of stocks that are benefiting at this stage, but there's no doubt that we will at some stage. And the other thing that's really happening is the resource investment recovery in Western Australia. So it's been a pretty flat, poor market for the West Australians. That's not greenfield stuff, it's brownfield investment, but it really is happening. And we are seeing examples where people shortages are occurring, equipment shortages are occurring, and so we can see prices rising and utilisation improving. So we're playing that through mining services at the moment. And it was very refreshing to see Rio announce that they're going to build a new iron ore mine. That's the first greenfield project we've seen for a while. And of course the lower A dollar comes into play, particularly with the recent sort of graduation from Australian companies being largely domestic to actually now becoming quite international and having some good success. So that will help for sure. So what's happening now too, because we saw a lot of money that's not normally invested in small companies push prices up, investors like us control the smaller end of the market. It's a bit higher risk, but there's some pretty high rewards too. With the market correction, prices have come down at the top end of that market. A lot of that sort of transitory money has gone out of the small cap market, which creates opportunity. So we can now fish in the bigger end of the small cap market. And as I was mentioned before, small caps give us better choices in new growth. Capital light service-based businesses, which Australia is growing. Disruptor companies, sort of key word at the moment. Definitely international opportunities and recovery stories. And in small companies, recovery can come a lot easier. You can replace the management, you can fix the balance sheet. If the product's good, you can actually get it going again quite easily. So look for those.